Good morning and welcome to this weekly market update from AGM Markets. Today is the 15th of October 2012. What we're going to do today is go through some technical analysis on Euro dollar, cable, dollar yen, dollar Swiss and gold. We'll go through briefly on the weekly charts, but mainly focused on the daily 4-hour and 1-hour charts. Just trying to give some sort of outlook going into this week. Won't focus too much on the longer term. We'll try and just give it as we do these videos week by week. Just try and stick it to the weekly outlook. We'll also have a quick review of the price action that happened last week, but the main focus is on the outlook for this week. For anyone who follows, we have 3 moving averages on these charts, apart from the weekly charts because the data doesn't go back that far. We need to get that sorted on the platform. The red moving average is a 55 simple, the purple is 100 simple, and the gold is a 200 simple moving average. I'm not making any trade calls or recommendations in this video. You trade at your own risk. If you could please read our full disclaimer on our website www.agmmarkets.com. Okay, let's start with Euro dollar. Briefly, let's have a look at the weekly chart and mainly just focus on the candlestick last week because throughout these videos I've always sort of picked a bias on each of these charts, and on the weekly I find it very useful purely to look at the pattern of the previous week's candle. I think it's just good to determine how the week can pan out. Purely on this weekly, what I'm focused on is this 55-week moving average. You can see that it's making the price action on Euro dollar act a little bit sticky currently. And you can see that we're kind of forming a bear flag, a bull flag, sorry, on this chart. But it also could be a sign that we're purely just stalling at this level, where we have the trendline resistance coming in currently. So you see that kind of coincides with the 55-week moving average. The traders may just purely not be focused on the 55-week. Because it hasn't been bouncing off to the pip that well, but you can see it is still stalling on the 55-week moving average is there, so there's no reason not to keep it in focus. But in terms of last week's candle pattern, if we just zoom in, you can see, the price action last week was quite choppy. This is kind of indicated with this candle. It's not a bearish candle, because, even though it's got a little bit of a red hammer. If anything, I'd say it's bullish, because I prefer to focus more on the wicks of the candlesticks. And you can see in last week's candle we had a nice sort of low, decent length lower wick. Some people would call that a hammer, and it is the sort of hammer shape, although I prefer it to be a green body on the candle. But what normally after this sort of shaped candlestick, what we tend to get is initially in the new candlestick it will pull down a little bit, because this candlestick is indicating that sellers are in the market because they've pushed the price down, but then the bulls come in near the end of the candlestick. So what you could take from that for this week is that the first couple of days, or even just today, we could get some sellers come in the market and push the price down, which is already currently happening, and then the buyers will come back in and push it back up, continuing the bullish momentum that we've seen. And you can see, if you look, I'll just quickly highlight for you this. Sorry, the shape thing's mucking up. Sorry, we'll just, if you can see the mouse cursor here, if you look at this candle here, you can see this is a classic hammer, and we had a bit of lower wick on the next candle, and it pushed it back up. Let's look at a better example. Classic ones here, a hammer there, continuation pattern, slight hammer there, continuation. Classic low wick there, continuation. You can see we've got a low wick here. So every time you look for the sort of wicks on the candles, they tend to follow. Big one here, continuation, a big wick there, and price pushes up. And then you can see there's a big wick at the top here, price comes down. Wicks around here, price holds. Nice decent wick at the start here, uptrend. And you can see we had a couple of upper wicks here, and then you can see the price is coming down. But now we've had these decent sized wick here on the previous candle. Wouldn't be surprised to see price to go up. But anyway, let's not dwell too much on the candlestick. In terms of the weekly, in terms of a bias on this weekly chart, I'd say initially we'll have a bearish momentum, which we've already had, but I wouldn't be surprised if we pop towards the upside. But if we're going to get a decent pop towards the upside in this weekly chart, then we need to get above this weekly trendline resistance, of course. But I mean, it's a tricky one really, because on this weekly chart, because the bulls and the bears are kind of at a loggerhead, and that's why we're getting this sort of choppy action, in my opinion, over these last few weeks. The bears are still well inclined to be bearish because the trendline resistance is holding. Then you could say the bulls are also inclined to be bullish because we have a nice decent uptrend here, and a little retracement, and then I mean it's a classic sort of bull flag really, so I wouldn't be surprised if we popped up. And then of course we do pop up, then we have the 100 week moving average here, which is still a long way away at 1.3495. Let's have a look at the shorter term chart on this euro dollar. I mean, nothing much has changed in these last couple of weeks, because as you can see, last week we spoke about keeping an eye on this 200-day moving average. After this big pop up here, if we do retrace, look like it might come down and test it. We haven't even reached it and we still popped up. So I mean, the price action hasn't been that clear. What I would focus on, and which has been playing out nicely, is this trendline support on this daily chart, euro dollar. That is still in play. But then again, you could also say we have a small trendline resistance here, also in place. So it's very 50-50 at the minute, and it's very hard to call on these longer term charts. Normally we've had it's been much easier to predict a sort of bias for the week, where to look for opportunity. I mean, I personally think it's quite good to pick a bias. If you want to be bullish for a week, then you can just look purely for buying opportunities. And normally, I mean, on these videos we've been quite accurate with our biases, purely just based on technical analysis, and then you can just look for the sort of shorter term opportunities that match your bias. Let's look at the shorter term charts. I mean, the 4 hour, what do we have in play? One thing that clearly comes out to me here is this fib here from lows, recent dip lows to highs. This fib is still in play, kind of bouncing off this sort of 61 and 50% zone. That's why we have it on there, and looking like it is once a popping up. But if we do get a nice pop upside, then we need to have some sort of solid candlestick close above this 50% level, if we don't get any sort of decent traction towards the upside. And that's the same with the 1 hour chart really. I mean, you can see the candle patterns quite similar at the minute. Funny enough, this current 1 hour candle is quite similar to last week's weekly candle, so keep an eye on how this plays out. If it does close similar, to see how the price action plays out, and then you can have a look at the weekly and pick your bias. It's one thing to do. I mean, candlestick patterns are very similar on all time frames. A lot of people say that the bigger the time frame, the stronger the pattern, and that is kind of technically true, but they still move the same way. It's just, I mean, candles are candles. It's just over the different time frames, obviously they move in sort of different times. So as we said, on an hour chart it will slightly pull back and then pop up, and on the weekly it could slightly pull back, but that pull down will be for a couple of days instead of maybe in like 20 minutes. But yeah, in terms of the euro dollar, nothing massively of interest. One thing I would be looking out for would be this fib here, especially as we've had one sort of an hour close, 1 hour candle close above this 100 hour moving average on the 1 hour chart. It looks like it wants to pop up a bit here, and that will kind of confirm the slight bullish bias that we have, I think, on this weekly chart, mainly due to that long wick and the trendline support, you could say, on the weekly chart. So yeah, keep an eye on this fib, see how it plays out. It looks like it's wanting to pop towards the upside here. We're getting quite a few bulls coming in, especially on this candle here. It really is reversing currently, so interesting one to see there. Okay, let's have a look at the cable chart. On cable, we've said that we have been due a retracement. That retracement is still happening, mainly due to the strong bullish price action we had there. How many bullish candles in a row? 1, 2, 3, 4, 5, 6, 7 weekly candles in a row, and you can now see that this is the 4th weekly candle in a row that we're starting to get some bearish traction here. So, but in terms of a healthy retracement, I still think cable needs to come down to this 100 week moving average here. That's what we said on last week's video, so no change here really on the cable weekly chart. In terms of the daily, any sort of buyers out there, keep an eye out on the trendline support. They're still a long way away from that. That will probably coincide with that 100 week moving average. In terms of the shorter term time frames, this is the 4-hour chart. We've got a very clean 50% retracement there on the 4-hour, so that's recent swing high to swing low. We've sold off, we've bounced back up to the pip, 50% retracement. That's why we look at it on this chart. Also coincides with 55 bar moving average and 200 bar moving average. You can now see it's starting to sell off a bit, so that fib is still in play, and I'd still keep that on my chart. Okay, dollar yen. It really has been a boring chart, this dollar yen. I mean, this is the weekly. Keep an eye on that trend line support there. It's still in play. The candles are starting to look quite, but I mean, this week, last week's weekly candle very similar to euro dollar. That sort of hanging man candle. I mean, a hammer-shaped formation, but if it's in a slight uptrend, then you could say it is a hanging man, although the uptrend isn't exactly that big. If we're going to get some momentum towards the upside, then we can get a weekly candlestick close above that 55-week moving average. Let's flick it to the shorter term time frames. This daily chart, very, very choppy chart. One thing I would say is that 100-day moving average acts as a very key resistance there. So if we do get any pop towards the upside here on this 100-day moving average, and if we get a nice reversal, then that could be a good selling opportunity in my opinion. In terms of a shorter term time frame, I mean the 4-hour, we have a trendline resistance here. You could bring that in a bit, and you could say it's pretty much tested now. So keep that in mind. Keep an eye on this current 4-hour candle. It could reverse. It could be a good selling opportunity. But no, nothing much of interest on dollar yen. It really has been a boring chart over pretty much all year, to be honest with you. One that I'm really not massively interested in. I just personally think there's much more interesting charts out there. This is the dollar Swiss weekly. We're still bouncing off this 55-week moving average. In terms of last week's candlestick pattern, surprise, surprise, it's a complete mirror image of euro dollar weekly. So instead of the sort of hammer formation, we have a shooting star formation, or just a reverse hammer, you can call it. But we've still closed above this 55-week moving average, so you could say that the bulls are still in control of this, but it is looking quite bearish in terms of momentum. In terms of the daily, all I would keep an eye on for, I mean, similar to euro. I mean, how many times have we said that this chart is a pure mirror image of, sorry, our computer's going funny there. How many times have we said that this chart is a complete mirror image of the euro dollar chart? Sorry, our computer's going up there. Yes, you have that trendline resistance down there. Also, the 200-day moving average as well is still capping this pair. So if we do get any bounce up on this dollar Swiss, which would be a sell-off on euro dollar, then you have to keep an eye on that 200-day moving average. In terms of the shorter term perspective on the 4-hour, trendline support looks like it's still in play. And if we do get any bounce towards the upside, you also have that 200 bar moving average as well on this 4-hour chart. But no real opportunity. I mean, it's been a strange one. Normally euro dollar has been fantastic for opportunities, and you can kind of pick a clear direction, especially on the longer term time frames where you think the market's going to go, but it is just quite choppy. I mean, look at the previous sort of 1-hour candles. It's just pure sideways action, chopping in between the 100 bar, the 100-hour moving average and the 200-hour moving average. So the way you could play that is a way that you could play this chart is to clearly look for a 1-hour close either side of the 100-hour and 200-hour moving average, and trade it either side. Alright, let's have a look at gold. I'm not going to draw the trendline support up because you know where it is. We're miles off that now after having a clear bounce off of that, and also that 100 week moving average. Last week's candle, I mean, we said in last week's video that or a couple of weeks ago, I can't remember now, that we were due a retracement. Similar thing to cable, really. We said that, we had 7 bullish weekly candles on cable, and when you have this strong sort of price action, the odds are for a retracement. Surprise, surprise, that's what we got last week. A standard sort of retracement candle, bearish engulfing, nothing drastic, but still a bearish candle, still a retracement candle. So the only thing I'd really be interested in on this weekly chart is a retracement down to this 55-week moving average, which stands currently at 1667. And on the daily, I'd look for a retracement down to this 55-day moving average, see what happens around there. That's just shy of the 1720 area, and also keep an eye on this trendline support. Yes, we're absolutely miles away from it, but price does like to come down and test these trendline supports, so keep an eye on that. It definitely is due a retracement. That's what we're happening. That's what we're seeing on this chart currently. 4-hour chart, I'm not massively interested in it. I'd literally keep it to the daily and the weekly, because if you look at those two charts, it is due a retracement, and we're getting that retracement currently. So I wouldn't be surprised if this was a bearish week in gold. So yeah, the first key support on gold for this daily is definitely this 55-day moving average, and of course we've got the 100 and the 200 below that. I wouldn't be surprised if you blew through all of them and came down and tested this trendline support. So no, that'll be an interesting one this week. I'll keep an eye on that, definitely. Okay, that's all for the charts. Let's have a look at the Forex calendar, see what we've got coming out this week. In terms of high impact news, today at 1:30 it's all about US retail sales, month on month, forecast at 0.7% from the previous 0.9. 3:30 we've got some Canadian data. We'll have to have a look at dollar CAD next week. In terms of high impact news, tomorrow we have German ZEW economic sentiment forecast for minus 14.6 from the previous minus 18.2, so expecting some bearish numbers there, although slightly bullish from the previous week, but still very, very bearish there for the economic sentiment. And out of the UK we have the BOE inflation letter, see what Mervyn King has to say about inflation there. And at 1:30 we have US CPI, key data that. It does say mid-impact there, but I personally think it should be high impact. Of course this is going to affect the dollar. The core CPI is the more focused on one, but if the CPI is a big miss or a big upside, then that will move the markets, especially euro dollar. So that's forecast at 0.4% from the previous 0.6%. So we're expecting slightly less inflation there. On Wednesday, 9:30, UK claimants count change forecast at minus 0.2 thousand from the previous minus 15,000. So slightly better numbers with forecast there. And also we have the MPC meeting minutes at 9:30. On Thursday, it's day one of the EU Economic Summit, so keep an eye out on there for any news out on the wires out of that summit. At 9:30 we have UK retail sales, month-to-month numbers forecast at 0.5% from the previous minus 0.2%, so we're expecting some better numbers there. And tentative throughout the day will be the Spanish 10-year bond auction. Keep an eye on that, that will move markets. At 1:30 we have the weekly jobless claims, forecast at 367,000 from the previous 339,000. At 3 PM we have the US Philly Fed manufacturing index number, forecast at 0.5 from the previous minus 1.9. And to finish off the week, on Friday with the UK public sector net borrowing figures, forecast at 11.8 billion from the previous 12.4 billion. And to finish off the week, last bit of data is the US existing home sales, out on Friday at 3 PM, forecast at 4.73 million from the previous 4.82 million. Okay, that's all for today. I hope you enjoyed this video. Have a great week trading. I'll catch you next week. Thanks for listening.